I've made this link tree so it's easier for you guys to get into contact with me. If you want to find out more about the course, it's over on my Buy Me a Beer. If you want to simply get into contact with me, it's over on my crypto Twitter or my crypto Instagram. How's it going, YouTube? It's Louis here. I'm back with another crypto update on Quant today. We go through these updates every single weekday, so make sure you do subscribe. Also, YouTube is just about engagement, so make sure you do like, subscribe and comment and share for the algorithm. Now, for the weekly candle close down over here, we can actually see that Quant closed bullish with a bullish hammer. However, we did close underneath the 20 weekly. What's a positive though is that it is a bullish pattern, and also the week beforehand we did close below the 55 weekly and then reclaiming it this week. So that's why we are coming down first, because we closed underneath the 20. We need to close above it to get this continuation like this. So until then, we're just trapped. It's going to be a choppy week this week. So already we've dumped back down to 123 and are rejecting it. So this candle itself is a bullish sign. So we would be expecting at least by the end of the week for some bullish momentum, maybe to actually break out above the 20 weekly. That would be a nice positive. So maybe it's just that at the moment a wick is being created. However, what I must say, although the weekly is looking bullish, there are some patterns on the lower time frames that could look bearish. So we'll get into that soon. Let's just scale over to the daily time frame, where we're still trapped in this range over here. So as we were saying yesterday, we had at the time I was saying that we were rejecting this area, and so it was looking to come back down to the low, and then it actually pumped a little bit after the video, but still closed underneath the 55, and then we did actually go down anyway. This is what we thought originally anyway, because there was a wick rejection at the time. So the last few days beforehand, it was protecting this support, and then the bears were protecting this resistance. So we're consolidating between the two levels of about 127 and $124. So we're trapped in between these two levels. I've already spoken about where I want Quant to actually close above, which would be the neckline of this double bottom over here. That is $131. This would then validate a pattern all the way up until, wrong one. Oh, sorry about that. So the pattern target would be $164. Let's just say back to this high over here, $163. So if we were to break out of this double bottom, as it did over here, where did we go to? 163. Where's this one saying we're going to go to? The exact same location. So it should just copy what it did last time. Look, once we got above, we confirmed its support and we were off. So I'd anticipate that if we validate this double bottom over here, we would break out of this long downtrend that began in October 2022. And so this would pretty much not give much hope for the bears, essentially, apart from this bear market box over here, as well as eventually in the future getting up to that purple area. So they have some defense in saying it's still below this psychological level of $150. I've named it the bear market box because it was back in 2021, the end of, where I was calling for lower price targets and I was taking the mick out of a lot, and we eventually met those lower price targets. Luckily enough, I said even buy down here at 50 and sell up here in the 200s over here, looking for re-entry at about 120, I was saying. So that's where we're pretty much sitting at the moment. So it's a good time to buy Quant, essentially, because as we were up here, I was saying I want to look for the 200 EMA on the daily time frame to be retested. At the time, we can see that was about 115. So when we got there, $123. So that's why we were calling for this to be the buy zone. But it looks like we actually fell below. We lost this resistance on the right, and usually when it fails to hold a support, you fall back to the old. So we didn't actually get all the way back down here, but as you can see, we did come back to this level of $100 exactly. So a nice psychological level, which we confirmed as support, and did not validate this descending triangle over here that could have sent us to $45. Remember, only losing $100 would make that happen, and we didn't see that to be the case when we validated this head and shoulders pattern that met my target exactly at $106. So now that it's reversing, we need to see the follow through. Again, in the last few days, we've been stuck in this tiny consolidation period between a $3 area, I think it was $3-4 area, whatever it is, and all we need to do is close above 131, and I think by the time you do that,
we would have already broken out of this downtrend, looking for it to actually come back up to the bear market box and break that high. Once you've done so, you can actually see that potentially this is forming a much larger double bottom. So with that being the case, if we don't push through this area over here and it is resistance, it could be that we're coming back down to 106 to $111 as our demand zone over here. So as we've formed this new higher low, we want to maintain it, okay? So even if we like now dump off, I want to find a bounce within that area. You can bounce before, just as I gave you this earlier area between $115 and $120. So there's two areas of support, one down here between 106 and 111, and then 116 and 120 over here. So these two boxes of support is where we could find bounces to break out, or you could come back down to this one and break out, and this would form a much larger double bottom over here. I'm going to head over to the 4-hour time frame over here, and that's what I was discussing about at the beginning of the update, saying there were some bearish patterns on the lower time frames. What we see over here is that this is still holding as support, so this is going to act as our neckline for this M pattern. And in the last few updates, we were talking about this rising wedge or bullish channel that ends up breaking out bearish. We can see that we did not actually, although we found some support here with a small double bottom, we failed to break out above this high, so it's still holding as resistance. So that's why if we do actually fail to make a new high, looking at this support, if it is lost, then you would validate a pattern down. So I'm just going to get you that pattern right now, and so you'd come back towards $120. This is acting as confluence, as I've just given you two key levels of support on the daily time frame between 106 and 111, as well as $115 to $120. And we can see some a further confluence when I measured this wave up, telling us that the golden pocket again is about $120. Now, I hope you guys enjoyed today's update. Please do like, subscribe, comment to bump up this algorithm. Again, I do have a discount on my course at the moment. It's down to £90 for the remainder of this week. So you can actually find out more information about the course on my Instagram, Twitter, or the Buy Me a Beer link. And that's all found in the link tree in the top right corner over here, or in the description and comment section underneath this video. Thank you guys for tuning in. Again, like, subscribe, and comment, and I'll catch you in the next Quant update tomorrow. Peace. There's a link tree in the comment section or the description down below, or even in the top right corner. You can just click it over here somewhere, and yeah, it can take you to my crypto Twitter, Instagram, where you can private message me. If you want to actually just take action on the course or the mentorship without talking to me, head over to my Buy Me a Beer. Now, I'll bring up a page looking like this. You can even get one single mentorship session anyway, but all the details that you need here, you get 10 sessions, and here you get 30+ videos, 6-hour course, and yeah, all the information you need is over here.